As a stock analyst at Whitech, my focus is on providing research analysis of stocks to assist investors in making informed decisions. While I may not hold certifications or registrations, my dedication is to staying updated on market trends. Leveraging my expertise in data analysis and market research, I offer comprehensive report and recommendations to individual investor goals and risks. My goal is to provide actionable information and support to help investors navigate the complexities of the stocks markets efficiently.
Ntpc Limited generates and sells bulk power to state power utilities in India. It operates through two segments: generation of energy and others. The company generates power from coal, gas, liquid fuel, hydro, solar, nuclear, wind, thermal, and renewable energy sources. It offers consultancy, project management, and supervision services. In addition, the company is involved in the energy trading, oil and gas exploration, and coal mining activities. Further, the company sells electricity to private discoms operating in various states. Ntpc Limited was incorporated in 1975 and is headquartered in New Delhi, India. Formation 1975. Established in 1975 by the Government of India to address the nation's growing power needs. Early years 1976 to 1980s. Acquired land for its first projects. Received government approvals for plants. And began commercial operations. Achieving profitability by 1983. Growth and expansion, 1990s. Crossed a significant milestone of 2,000 megawatts generation capacity by 1985. Witnessed the commissioning of its first 500 megawatts unit. And expanded its portfolio through acquisitions. Installed capacity surpassed 15,000 megawatts by the end of 1994. Diversification and recognition 2000s. Ventured into consultancy services and started exploring gas-based power generation. The Government of India divested some of its stake, making Ntpc a listed company in 2004. Ntpc was conferred the prestigious Maharatna status in 2010. Present-day 2010s onwards. Continued to expand its footprint across various power sources, including hydro, nuclear, and renewables. Today, it stands as India's largest energy conglomerate with a dominant presence in power generation. Revenue growth. While the recent one-year revenue growth of 35.4% is impressive, analyze the trend over a longer period, 5-10 years. To see consistency, look for analyst reports or research articles that break down the revenue sources, thermal, hydro, renewable, to understand growth drivers. Profitability. Don't just rely on top-line growth. Analyze profitability ratios like return on equity, ROE, and return on capital employed ROCE. While a slight downward trend might be present, compare it to industry averages and see if it's a cause for concern. Debt levels. A healthy debt-to-equity ratio is crucial for a company's financial stability. Analyze Ntpc's debt levels and their impact on future cash flows. India's energy demand. Research government projections or industry reports on India's future energy needs. Align Ntpc's capacity expansion plans with this demand to understand how well positioned they are. Renewable energy integration. Analyze how aggressively Ntpc is integrating renewable energy sources into its portfolio. This will be crucial for long-term sustainability and meeting government clean energy targets. Regulation and policy changes. Stay updated on government policies related to power generation tariffs, subsidies for renewable energy, and environmental regulations. These can significantly impact Ntpc's profitability. Ntpc Limited generates and sells bulk power to state power utilities in India. Earnings per share, EPS, expected to grow around 8.1% annually. Ntpc has been growing earnings at an average annual rate of 9.9%. While the renewable energy industry saw earnings growing at 37.2% annually. Revenues have been growing at an average rate of 14.8% per year. NTPC's return on equity is 12.5%, and it has net margins of 11.1%. Revenue forecast to increase by approximately 6% per year. Market growth. NTPC underperformed the Indian renewable energy industry, which returned 131.8% over the past year. NTPC exceeded the Indian market, which returned 47.9% over the past year. Indian market earnings projected to grow at 17.9% annually. Indian market revenue anticipated to rise by 10.7% per year. NTPC's forecast earnings growth, 8.5% per year, is above the savings rate, 6.7%. NTPC's revenue, 6.3% per year, is forecast to grow slower than the Indian market, 10.7% per year. NTPC's earnings are forecast to grow, but not significantly. NTPC's earnings, 8.5% per year, are forecast to grow slower than the Indian market, 17.8% per year. According to the statement, NTPC has set a target to add 5 GW of installed capacity, reflecting its commitment to providing clean, reliable, and affordable energy solutions. In FY24, NTPC successfully added 3,924 megawatts of new capacity to its portfolio, bringing its cumulative installed capacity to nearly 76 GW. Presently, the group has an operational capacity of 3.5 GW, with an extensive pipeline exceeding 20 GW. By 2032, NTPC is looking to expand its non-fossil-based capacity to 45-50% of the company's portfolio. That will include 60 GW capacity with a total portfolio of 130 GW. NTPC Limited is India's largest integrated power utility, contributing 1/4 of the power requirement of the country. With a diverse portfolio of thermal, hydro, solar, and wind power plants, NTPC is dedicated to delivering reliable, affordable, and sustainable electricity to the nation. The company is committed to adopting best practices, fostering innovation, and embracing clean energy technologies for a greener future.
Thank you for watching.